Hello everyone, good morning and welcome to Trading European Open Live here at the Live Trade Room. Now today is Wednesday the 31st of October, so happy Halloween to everyone. Just to explain what we do here at the Live Trade Room, we're professional traders. We trade the markets with live capital every day, so every decision, both positive and negative, will have an impact on our trading account. So that's very important. But what we do is we look to identify high probability trading opportunities when we trade these markets, and we execute trades with a high degree of consistency. So it's not an erratic approach. We look for the same types of setups each and every time we look to trade these markets, utilize our experience and our knowledge and understanding of these markets and the nuances of many of the different markets that we trade. Then we look to manage with a high degree of discipline. So yesterday was the perfect example. We're able to get into a couple of profitable trades. We took risk off the table, as we would ordinarily do, and we were very close to taking profit actually, but unfortunately as things panned out, that wasn't the case. The markets pulled back quite aggressively. So what we were able to do is to book in a little bit of profit on those trades as the market pulled back, so we didn't expose our capital, and then we were able to get into those markets again at a much higher price and able to capitalize on that move to the downside. So it's just a good example of effective risk management. So very important that we do manage our trades with a high degree of discipline, and that's with one aim, and that's to book in consistent returns. So we do look to cut our losers short and look to let our winners run. Okay, so just before we begin then, if I could just refer you to our risk warning. Of course, just please do familiarize yourself with the risks involved in trading these markets, and do take a moment to read our risk warning currently up on screen. Okay, so before we begin, let's do a quick review of potential market moving news. So this is very important for every trader, that they understand the news flow for the day. So we've had a lot of news events over the course of the Asian session. I suppose the major event very much is the Bank of Japan, and they've decided to keep interest rates at minus 0.1%, and we have the press conference as well from Kuroda. So there's I suppose external concerns that the BOJ are considering, and none more so the whole sort of protectionist debate, which obviously is pioneered by Donald Trump, the America First policy. And that lends itself to some concerns on a global basis. However, very much kept things fairly stable so far. So not really interested in rocking the boat at this stage. As we look through the news events, and we're looking for the red high impact news events, and we can see that we've got some CPI data, inflationary based data out, so it'll be interesting to see over the course of the morning session, largely at 10 AM, and this is all London time. We'll be able to get that data. So I suppose it is worth noting as well that it is the final day of the month, so traditionally it's not the most volatile of days in the whole month. There's a lot of reconciliation. Those traders that are been in trades for a while might look to take profits over the course of the day, so you can get a lot of sort of selling the highs and buying the lows kind of type of trading. So we're just going to take that into account when we trade these markets this morning, and these are some of the nuances that we will hopefully pass on to you all. We do have a GDP figure coming out for the Canadian dollar at 12:30, so that will be interesting to see. And with all of these figures, we're looking for strong deviations as always. We've got a couple of important news events as well. We've got crude oil inventories at 2:30, so we'll be trading live for that. The S&B, we've got the chairman of the Swiss National Bank due to speak. We've got quite a few central bankers speaking this week at various different events. Now, Jordan is speaking about protectionism and how it makes monetary policy difficult. So all of these will feed the narrative that, and probably the realities of it feeding into kind of global growth as well, and that particular conversation. So, and we also have the Bank of Japan, the Bank of Canada governor due to speak as well. So he's testifying in front of the Banking and Senate Committee. Okay, so just to fill you in a little bit in terms of what we have coming tomorrow. It's a bank holiday in France and Italy and in other parts of Europe as well, so do be aware of that. As we scroll through, I suppose the big news tomorrow that we might get some preparatory price action today would be the Bank of England. We'll have the inflation report, we'll have the votes, and we'll have the monetary policy, and of course we'll have the governor of the central bank due to speak as well. So a lot of it is central bank related this week. And I suppose the big news on Friday's non-farm payroll. So we have the ADP figure today, which I'm not sure if I mentioned that one. So that's a prelim figure to the non-farm. So again, if we get a strong deviation to the upside and to the downside, it will feed into the success story behind the dollar. We're likely to get a little bit of a move off the back of that. But Friday is really non-farm payroll. We'll have employment change number and the unemployment rate as well. Okay, so that's just a little overview of the news then. So let's get up our trading platform. And for this, sorry, just bear with me a second. Okay, so let's have a look, and I'll slide this across onto screen. So the level that we were looking for this market to break below was the 1333. So we have bounced off that level precisely 1335. So a couple of pips off that low, and as you can see, we kind of bounced off it a little bit. So looking a little bit positive. Let me show you what that looks like on a monthly time frame. Nice strong selling candlestick. You can see the previous 4 months have been, I suppose, comparatively choppy. So now we're getting some direction. I suppose this was April, May, which provided some really good opportunities. A few opportunities within these, but you can see the last 4 months we had a strong move lower, really strong pullback, started to make new highs, rolled over to the downside, and now we've got the really strong move, which is why we're able to benefit from that move on a number of occasions over the course of the last few weeks. So that's the euro dollar on a monthly time frame. Yes, there is support in and around this little low in here, which is why we've got that red line on the screen, and but we do for now expect this market to continue lower. But from a daily perspective, you'd actually expect it to just bounce off this level just a little bit higher. It doesn't have to, we don't have to retrace yesterday's move completely, but I'm sure there will be a little bit of a squeeze further to the upside, unless we get something fundamental driving this price lower. But either way, the level is the 1333 to the downside, so do be mindful of that. That same level for the pound dollar is just below. It's in here at the 2663 level, and then that would be signals that this market is going to. There is a nice little bit of air beneath this level, and we'd expect this market to continue lower if we get a break of that level. So today we can be a little bit patient. We can more likely to see, and this is more of a nuance, but more likely to see a little bit of a retracement, and we could get a squeeze up to 27.76. So there is a bit of a trade in that if some strength, but the problem is we're buying pound strength at the moment. Probably is a very short-lived trade. Another market we were looking at above the 113.20 was the dollar yen, to break above that, and we were above that for a little bit today, and now we've just rolled over to the downside a little bit. So we still expect this market higher. As if we will actually see that move today or not, that remains to be the case, but we'll monitor it closely. Same situation for the dollar Swiss, not much volatility today, so unless that changes, we wouldn't be looking to get into it. The dollar CAD's an interesting one. If we get a break above 31.58, this would represent a good opportunity there. The current price is the 31.36 level, so we're only 20 pips away from that. So this would certainly be worth looking at, perhaps. So we'll come back to that one. So we're getting the actual rollover now today against the New Zealand and the dollar. So this market could represent a little bit more of a move to the downside. So we'll have a look at these and see if we get the moves that we'd be looking for. As you can see, the momentum is already just moving to the downside, so we'll see what opportunities we get. The pound is strengthening against the euro after yesterday's break, so we don't really want to be trading that at the moment. The pound yen strengthening a little bit after yesterday's indecision, but we've had today's Bank of Japan rate decision policy and conference as well. So clearly a little bit of yen weakness is beginning to creep in. With not much volatility, it must be said, we're still firmly contained within the highs and lows of the previous 2 trading days. So there's just probably marginally better opportunities elsewhere. Now, the market we've been looking at very, very closely yesterday was the gold market. Now, the problem we have is the 12.13, very likely to provide a little bit of support around that level. So you can see the breakout to the downside. That's why we were looking to capitalize on that move. But we've seen the majority of the move from effectively 12.23 down to 12.15 over the course of the Asian session. So let me see. So we've had some. So we've had this kind of rollover action, pull back to previous support, which is just kind of in keeping with this level here. So from a price action perspective, it's been pretty good. We've broken below the 12.16. We've extended lower. We've bounced back to that level. So you can see this kind of move here. We've extended a really strong explosive move to the downside, consolidation move sideways, and now we're extending lower once more. So worth looking at for us. This has disrupted price action. Okay, US oil, a little bit of strength kicking into the oil markets today. No major surprise for this level here to become a little level of support, because a break below it would be very, very significant and would get probably a lot more selling coming into this market, for example, below the 75.25 level. So we're nicely above that level. So let's see if this level becomes a support level, in which case we could get these prices pushing higher. So we're just in that phase at the moment where this market could literally move in either direction. We've got the S&P 500, bit of strength creeping into that. We could have a little bit of resistance coming in at 2700, and we're virtually at that level now. So let's see if we break above it and then perhaps pull back. That would be a better trade for us. So let's focus on the S&P today, and we'll see what opportunities it gives us. Yeah, these markets gapping higher a little bit, you know, pushing higher with a little bit of momentum. So maybe we're going to get a little bit of a bounce off these. The FTSE is finding a little bit of strength, and so too is the stock. So we've kind of got, well, see, the problem with the FTSE market is we've extended lower and it's been quite choppy, and it's made a low, and now all this is really technically kind of a pullback, and the level we would expect it to pull back to would be in and around the 72.20. So it's all about having expectations for markets from a price action and support and resistance perspective. So that's all worth looking for. So that's the FTSE market. So what we've done is we've identified a number of markets now that we can certainly look at for potentially some high probability trades. So we look at the S&P for a bit of strength coming in there. The gold market to the downside, but we'll have to sort of be careful. And then we've got effectively the three so the breakout to the downside, the New Zealand, the Aussie, and the dollar CAD to the upside. So we'll take a close look at these. So we effectively have, so let's start with the three currencies then. We'll split the currencies into three on the left hand side here. So we put the Aussie dollar, just in here. So this is our trade plan for the session. So we look at the dollar CAD, the Aussie dollar and the New Zealand dollar. So they're in various different stages really at the moment. So we go into these in a little bit more detail in a minute. And then we need to look at the gold market. So we put this top left, and also look at the S&P. We'll put this bottom right. So this is our trade plan for the session. We'll see what opportunities we may or may not get over the course of the session. So so let's start with the Aussie dollar, sorry, the dollar CAD then. So now we'll go into each of these markets. We'll really assess. And straight away, if I get up my pen, we can see something from a price action perspective. We can see something formulating, which is interesting for us. So let's get up that pen. So clearly on this is a 15-minute time frame. So we've clearly got this kind of, which what it is effectively a bull flag. So if you could just imagine this price action kicking up like that, and we've got this narrowing, we've got this lower highs and higher lows. So those are important levels for this narrowing of price action, and it creates this little bull flag. Now, from a price action perspective, we'd be looking for this kind of movement to the upside. However, this market can clearly move in either direction. So equally, a breakout out of this range to the downside would be quite certainly useful for us. So we have the expectation for prices to push higher. That's what we would like to see happen after a bull flag, is to see continuation to the upside. So we shall certainly see if that's the case. Just want to zoom out just a little bit. Let's look at this on an hourly time frame. So I think we will still, for the time being, just focus on the 31.58. Maybe there's an opportunity to get into it at a bit of a lower price. but I suppose when you trade off the potential of a positive outcome, then you may as well just sort of wait for this price to get above that level. So we're going to clear this bull candle, bull flag, and wait for this market to break above the 31.58, at which point we're above the 31.50 level, and we'll see if we can capitalize on a breakout above this level, or perhaps a pullback to that level. So what we can do is we can identify this level in here, this line, as the level that we're looking for to take this market to the upside. Okay, so let's see where we're at with the other currency pairs. So let's just take a moment to just get a feel and understanding for this market. So the idea is very much based in Aussie dollar weakness, expecting this price to continue lower. So we can utilize a few of these levels. So we've got these levels sitting in here, this price potentially rolling over to the downside, and we've got a nice little potential move still further lower. There's a little bit of air between the 70.75 and the 70.50 level. So you can see how this market is kind of moving in 25s. So we get a breakout to the downside at the 7100 effectively. We've got support coming in at 70.75, and we've got other support at 70.50 level. And we could even take it down a little step and suggest that we've also got further support in around the 70.25. So it's quarterized, if you can see that. Let me look at this high in here. So again, we've got another quarter above the, just roughly around the 71.21 level, which could be a few pips away from the 71.25. So it's important to see these, to see how these markets move, and they kind of respect these levels on multiple occasions from a high and low perspective. So it is quite choppy sort of price action in here. So I suppose what we can do is we can look for, if we get a break below this, the 70.75 level, we'd look to trade it down to the 70.50 level. So we might not be holding out for prices pushing down to 70.21. But certainly that little break further to the downside if we get it. So I suppose the level I would prefer to just focus on would be the 70.71, so just a little bit below that 75 level. The problem we have is there's a clearly defined kind of level of support as well, just kicking in here. So it's a little bit of potentially an upward channel. So if we fail to break this low and some strength starts coming in and we start breaking above this level, then we'd expect this market actually at that point to start pushing up in and around these kind of highs in here. So it might take a long time to unfold, but we do have to acknowledge the price action and the potential for this market to actually push higher from this level here. So I suppose what we're saying is that this market has the potential to move in both directions. So it might not be the highest probability trade we could ever get into, but one probably worth looking at. Aussie dollar. Okay, so let's get these levels back. So we're looking to buy this market above the 31.58. we're looking to sell this market around the 70, 71. Let's look at the Aussie dollar just for a moment. So now we're just sort of breaking below that particular level as well. So we're getting that push further to the downside. Plenty more scope to the downside. In fact, this is a little bit cleaner. This is the level that we would like to sell below, the 75.39. So this is a higher probability trade, and it's quite straightforward, this one. We're looking for an opportunity to, let me bring this back up, to sell this market. So this one is a pullback trade to this level, previous level of support, and we're looking to sell it from that particular level. So these could be breakout trades, or at least breakout followed by pullback trades, and this one is a pullback to previous level of support, which becomes resistance. So we're getting quite close to that level as we speak. It's interesting to see the gold market and to see what that is doing. So the trade is very much to the downside, as you can see, but we're getting a bit of a pullback off the lows. So we do know that there's potential for significant support in and around these levels, and that it was a long level. We were moving sideways in this market for a good few months, 2 or 3 months, and as you can see, we've broken to the upside, and we do still expect this to the upside. So don't get me wrong, this is just a pullback off the highs. That's all that is. So if we got some support around the 12-13 level, we might be looking to take this market to the upside. This blue line in here just shows just more of an intraday level of support that yesterday we broke below, which is why we were looking to sell that market yesterday. And we've got some continuation during the Asian session in that. Okay, so that's the gold. Now we're actually getting a structural failure back inside that level, so it doesn't necessarily fill us with that much confidence now. This high here represents a structural failure back to the upside, and we're above that 12.1685 level. So I suppose if in doubt, we look to stay out. So right now we don't necessarily want to get into that market, but we'll keep monitoring the price action just to see what opportunities we might get a little bit further down the line. And the last market for us to look at is the S&P. So let's look at it on the daily time frame again, and we're potentially getting close to clearing out this previous level here. So we have the 2709 already sitting in this market. We've broken above yesterday's high. We'd expect to see continuation, which is what we're seeing. Let's go into that on the 15-minute time frame. So we still have this level. We're above the 2702. What we'd like to see and what we'd focus on is this market breaking above 2709 with potentially either a breakout trade if we get the right type of price action at this level, or the pullback trade to the 2709. So just a little bit of patience really required for the S&P. Okay, so this is our trade plan for the session. And above this level, I'm just going to put a little question mark, because I think that's probably the fairest sort of position for us to take for the gold market as things currently stand. And the S&P, we're looking at the 2709 level, and see if we can capitalize on that market to the upside. So we've got 3 breakout trades and 1 sort of pullback trade, which we've already pulled back to that level now. So what could be quite interesting for us is just looking at this market on a smaller term time frame. Okay, so that level just corresponds with this, but there is the 65.40 level, which is just above it. So, and that's the price which we're getting a move to that level now. 65.41. So now let's go in and see if we get a turnaround signal at that level, and we'd be happy to take that market to the downside. We're not going to be too aggressive with these markets today. Probably wouldn't make much sense for us to do so. So we are getting that little bit of a turnaround move in the New Zealand dollar as we speak. So this might be the first opportunity for us to get in on the pullback in at this phase in here. Slightly bigger range to see if we can capitalize on that move to the downside. So let's see if we kind of roll over to the downside. If we get a close in and around the 65.39, then we get some continuation. We might look to get it in at that point, and we'd have a very, very, very small stop loss. So it's a trade worth taking. So we can look at this just in the bottom left-hand corner of your screen. We can see that the gold market is just extended higher now. So this is a really strong reversible trade now. This is a structural failure to the upside. So again, the question mark is probably very apt at this stage. So let's see if we just get a little touch lower. So we're just going to see if this price action breaks below the 65.39. Then we don't need to think too hard, just look to get into it, because we've pulled back to a previous level of support, and that allows us to sort of guide. It allows us to get into these trades. And of course, if we don't get that follow through, which is kind of what we're currently seeing, then it can allow us to just back off from the trade. So it's just understanding what price is doing. So if we get a break below the 65.39, we can get in and just place a stop loss above the 65.41. So actually a ridiculously small stop loss. Okay, so a little bit of indecision then for the New Zealand dollar. Bit of dollar weakness right now. Apologies. So we're clearly getting this structural failure now, so we can literally back off the New Zealand dollar. There's a bit of dollar weakness beginning to creep in. And the S&P is moving quite nicely up to those levels, the 2709. So just to inform you, really, when we get these pullbacks to these previous levels of support resistance and we get kind of continuation to the upside, it's still not off the table for us in terms of a sell trade, because let's say we just break a little bit higher, we get this little bit of price action. What we can use is what's called kind of a structural failure to the downside. So let's say this market topped out at this level. We had a little bit of a pullback back to this previous level in here, and we extended this market to the upside, but failed to make a new high. That's what's quite important. Then you can still identify this low as a good opportunity to sell this market from that kind of level, somewhere in and around this level here. And what it represents is a structural failure to the downside. So you just got to be a little bit patient, but you can still get into this market to the downside even if we break above. So as long as the structural failure or something that indicates to us that this market is no longer looking to push higher, it can still give us an opportunity to sell it in and around that kind of level and area. So that's probably worth taking note of. So we just need to be a little bit more patient, really, with the New Zealand dollar. You see, just to sort of clarify, the gold market, which has seen a structural failure on bigger time frames above the 1216, no longer suggests to us that the market is going to move lower at this particular point. So we're extending to the upside, and this might be the beginning of multiple moves to the upside, so we'll have to wait and see. Any questions, of course, you know, do feel free, guys, to use your chat box if there's anything I've covered that you would like some support with. You know, do post any questions you have in your chat box on screen. So it'll be interesting to see how this market unfolds this morning. what we can do is we can just have a quick review of some other markets. So let's see what's going on elsewhere. Start with the euro dollar. Small bit of strength coming in off those lows. We're still kind of extending to the upside. So effectively kind of a pullback to these lows in here would give us an opportunity to push this price higher. But we need a 20 pip plus pullback on it if we can get it. I mean, really, we're talking about this price pushing back to the 27.20 level, and we're at the 27.49. So it remains to be seen whether we'll get that opportunity. But again, we're kind of buying a pound strength, which is probably not the greatest of trades right now. Dollar yen just bouncing off these highs. Dollar Swiss bouncing off the highs as well. So there's a little bit of profit taking coming into the dollar moves. Across the market, we can see those set up. We're looking at this on a smaller time frame. So to the Aussie and the New Zealand, nothing yet setting up. In fact, there's a little mini structural failure back to the upside again, so we'll see where this market finds a little bit of resistance. Pound is strengthening a little bit against the euro. The yen is probably selling off a little bit as well. Gold, really strong bounce off the lows. Nothing too significant. Like yesterday, we for the latter, certainly for the US session, we had a strong kind of pullback to these sort of $12, $25, $26 levels, and then in the latter part of the US trading session, we've kind of filled out a little bit. It's just kind of squeezed a little bit lower, and today now we've opened up and we've just moved quite lower, significantly lower during the Asian session, and we're pulling back a little bit now in the European. So so that is the gold market. US oil. It's not really looking like it's going to move that aggressively to the upside. In fact, a little bit of a rollover to the downside looks a little bit more likelier now. So the S&P, we do want to clear the 2709 and see if we can get a pullback on it. So the alternative would be getting into it at kind of these prices back here. If we got a strong pullback to 2689, we might get that benefit from a bit of a move up to the 2709. The Nasdaq just squeezing higher, hasn't really moved. A similar situation for the Dow, but they're all sort of pushing higher, but just doing so quite slowly. Same with the FTSE, same with the Euro stocks. So unfortunately, we're kind of back to we're back to the 3 amigos really for an opportunity in the dollar. So this price in here could provide the next leg to the upside, you see. So we don't really want to get involved in this pullback because we've seen such a strong structural failure to the upside. We're now experiencing the pullback. So So we've got a little mini structural failure up at this level. Really tight. It's only a 1 pip from the structural failure. We're getting that rollover now. So you can see the potential for this market to come back to these levels. Let me just take note of the low in this market, which is the 65.32. It's so very tight because we're only talking about a 6-7 pip stop loss in this trade if we get into it, so we wouldn't be risking an awful lot with the trade. Maybe we get a bounce back and then we get the next rollover, at which point we could get in below the 65.90 39 level, place a stop loss just above this high in here. You see 1 or 2 pips in these markets, which are some of the largest foreign exchange markets in the world. 1 or 2 pips is virtually irrelevant. So there's a very tight range between 65.39 and 65.42. We're only talking about making a decision within a 3 pip range, and that's often so there is the potential for this market to squeeze higher at this point. So guys, I am conscious of the time. It is the top of the hour. We are going to switch across to the live trade room now. Please do feel free to read the description below. You are very welcome to join us for we're still currently offering a 14-day free trial. If you do want to join and access over 76 live trade rooms per calendar month, then please do take advantage of that. It will be ending this week, so hopefully you can join us. And then if you decide to stay on, there is only a fee of $9.99 per calendar month, so hopefully you'll find it a valuable experience. We've got a number of very exciting new products and services and signal providing signals as well. So we're really excited about some of the products and services we'll be launching now very shortly, and if you're a member, you'll obviously be able to gain access to those as well. So hopefully you can join us through the live trade room. I do apologise, I do need to switch across at this point. So if you would like to connect with us, please do give us a thumbs up for this video if you can, and do subscribe to the channel if you've not already done so, and you'll be notified when we go live next. And you can also connect with us through our Facebook, Instagram, Twitter and LinkedIn. All the details are there up on screen. So all that's left for me to do now is to thank you very much for joining us. Do take care, and we look forward to seeing you all next time. For everyone here, bye for now.